to everyone for coming along. I'll give you an update. Some of the short slides today you won't have seen since June, because I only got a chance to cover part of the stuff last month in November. And some of them will be an update from the October meeting, rather. So, quickly run through first set of slides. Got a signal June last year telling me that a significant top was likely to happen. I tend to model the Dow specifically, but cover other indexes as well. The signal's very reliable. It's happened 20 times in the past, 130 years, and each time there's been at least a 12% drop in the market, an average of 33% and as much as 90%, which happened in the Great Depression. So when this signal happened in June, I knew that a top was likely to happen sometime soon. It's very accurate in terms of telling us a top's going to happen, but it won't specifically tell us the date it's going to happen. So from this model output, the signal, I developed a tool which came up with 4 windows of opportunity. Some of them just a couple of weeks long, some of them as many as 4 weeks, so 4 months long. So window 4 is actually 4 months long. There is, and I've never talked about it before, there's a window 5 that happens March, April, May next year, 2016, but it was such a long way off, I didn't put it on the model charts over the last few months, but we can talk about that next month in December and possibly January, if the market goes higher. So the market climbed up to December, formed what looked like could have been a top in the market. However, once we got to February and March, we realised the market had gone higher still. That means window 3 was out, and we were looking then at window 4 as a likely top in the market. I did some other analysis with daily charts and came up with 2 extra windows, window A and window B in blue.
Is this good? Can people see better?
Yeah.
It's better in the dark like this?
Yeah.
Okay.
Not for the video.
Not
I can't see your speed.
So some additional analysis gave me windows A and B, and where window 4 and window B overlapped, that looked like a likely candidate for the top of the market. And I did some other research. I'm not going to go into that this month, but last month I went into it in a bit more detail. Over the next few months, April, May, and then June, the market did top out both in window B and window 4 in the middle of May, and that looked like a likely candidate for a top. The average after the signal in June for a top to happen is 39 weeks, and we were just a little bit beyond that with that May top. And I said the top would be somewhere between 18,300 and 19,000, and the top was 18,351, so it just crept into that range. Going forward into August, I'll just move the slide there in terms of getting a bit more real estate on the screen. And then that low that we got in late August up into October, we've had a very sharp rally since that bottom. But it looks like potentially we have a top there, May 19th, for both the Dow Jones and the S&P 500. The Nasdaq actually topped out a little bit after that. We got a 16% drop, so yet again, the minimum of 12% was confirmed by the signal back in June. And the delay was actually 48 weeks for that top in May. The last month, the market's climbed with a very sharp rally back up to 18,000. But one of the things to point out was it took over 5 months to get from the previous time it reached 18,000 in November last year through to May. I'm not sure whether it'll be able to climb up there again. We'll see over coming months. When we look at that rally, we look at the upward momentum. The Dow Jones is weak, and this week and next week it might actually break. The Nasdaq Composite also quite weak, and again we may see that break this week or next week. And the S&P 500 actually broke last week, so the upward momentum for the S&P 500 was broken by the drop last week, which suggests to me that this rally may not go much further. So we're bounded between the upper part of that rally and the low in August. What I think is probably going to happen from the model output is we're going to possibly see this drop down, which will break that rally, but then we'll see a rally up to year end, which will test that top. If that test is successful and goes higher, we might get a new high. My suspicion is not. And then what I think we're going to get into the beginning of next year is a retest of the low then. So we're going to be trading inside that box for a while, but whether it breaks to the upside or the downside, my guess is to the downside, we'll find out over the next 3 to 5 months. Something I wanted to share with you that I've come across just in the last month since I last presented in October. Here's a multi-year view of the Dow Jones. We've got the high in in October 2007, got the low in 2009, and then right up to present day. I was looking at a particular model and the outputs from it. I had a date of February 2009 came out. Then I had a date of May 2010. Does everyone remember what happened in May 2010? Flash crash, that's correct. Then the next date that came out was July, August 2011, and remember what happened then? We had a 2,000 point drop in the markets, on the Dow for sure, and that was the waterfall we had mid-2011. We had a fairly significant drop in May 2012, and the last date that came out was August 2015, just 3 months ago, and that was the other flash crash we had. So this model is actually finding significant drops in the market, and particularly is going to be a way to determine future flash crashes. Certainly, the quantitative easing programs we've had have fueled the potential for these flash crashes to happen, and also each of them have happened when QE has ended. There's been lower volume trading, and the computerized trading that's going on at the moment that didn't happen decades ago has possibly also contributed to it. If we wind this model back over time, if we go back through 2008, we see lows in October and November 2008, summer of 2008 in July, and then early, and those were the lows in that particular year, 2008. Then if we go back through 1996 to 2007, we see two particular points from the model, either side of 9/11, which was quite significant. I wasn't expecting that. And then lows in summer of 2002 and early 2003 with significant lows in the market, and then May 2004. And then before that, November 2000, September 1999, and October 1997, and then previous to that, 1991, 1990, and actually the crash in 1987. So this model is finding significant drops in the market. You have a question?
Yes, the volume on the bottom seems to drop off. Is that a...
It does. That's just the I use big charts, and that's the data that's gone. I think they just don't have the data for it.
That's what my guess is.
It's nothing other than that.
Weird.
It's the same question, but not in this chart, but the earlier charts where you're showing weekly, it showed that volume is going down. What do you think is the cause for the volume?
You did this chart here?
No, keep going. Yeah.
That one there?
Yeah. Basically from 2010 on. Or 2013.
Yeah, the volume. It's something that Darryl points out quite regularly, is that we've just seen a general trend down in volume over the last 5 to 10 years.
What does that tell you?
Figure?
What does that tell you?
I think a lot of the trading is institutional. I don't think the participants are nearly as much as they have been in the past in terms of retail. So I think the nature of trading has changed. So looking at the Nasdaq, we have the peak in 2000 and the current rally, which I said back in the spring was fairly long and possibly due for a fall. So we did get a new all-time closing high and an all-day intraday high. The market came down on the Nasdaq as well as the S&P 500 and the Dow, and it has actually bounced back up again. It hasn't created a new high yet, but it's challenging the high. Looking at the Nasdaq 100, still a sort of situation, we're going to rally. We still have the all-time intraday and daily close way back in 2000. We haven't breached those yet. We had a fall in the August-September timeframe, and we actually had a slightly higher high, which I wasn't expecting. So the Nasdaq 100, I haven't looked in detail as to why that's happening. It's possibly because of some of the stocks being in a bubble formation and therefore rising back up to reform the bubble that hasn't fully deflated yet. So that's something to do a little bit more research on for next month. The treasury notes, I won't go into the detail that I went to last month, but my analysis predicts that we'll go possibly down to a low in treasury yields into next year. So one of the reasons why I think the Fed is struggling to actually lift rates is because they know that essentially in the economy rates are still headed downwards, and if we do get a fall in the equity markets and money goes into bonds, the yields will fall lower. Going back to February and then March and April, this is the trajectory of the 10-year yield. I had a window one which didn't really form a formal bottom there, but out into Q1 2016, potentially we've got a low coming, and the market there, as we are in November, has come back up, but we've got a very slight downtrend. And if you look at some of the large timescales of weekly, monthly, and quarterly charts, you see a general downtrend that will head into next year. Currencies, This is a multi-year view, just looking at the last 2 years of the dollar, last 3 years actually, so it's this year and the last 2 years. I said that at that rally we'd possibly get a dip and a rise back up and taking that top out again. What we actually got was we got a dip and we didn't actually get that rise at the time, we got a sideways move. And then I said potentially we've still got a chance for a rise up, and then this last month we have. The market's come back up and it's challenging that high again in the early part of this year. And if they do raise rates at the Fed and money does come to the dollar's going to get very strong. That could force a recession as companies really find it difficult to sell their products overseas. And then we see the dollar just getting stronger and stronger. Similar sort of mirror image for the euro. This is a multi-year view, just looking at those last 2 or 3 years. A sharp downward trend, and I suggested we probably have a recovery bounce and then back down again, testing those lows. That's what happened middle part of the year. I thought we'd have a move down at that point. We actually had a sideways move, but like with the dollar, but a mirror image of the dollar, I was expecting a downward move, and we have had the beginning of that downward move. We'll see how far that goes. Individual stocks now. These are stocks that have actually formed bubbles. We haven't got a bubble in the indexes in the US, but we have got stocks that are in a bubble. Were you going to ask a question?
No, I'm going to be talking about all these things.
Okay. Apple, Apple is one that I'm going to cover now, and I covered Boeing and Home Depot last month. I'm going to cover Amex, United Healthcare, and Visa this month, and then Disney. These are all stocks in the Dow that I believe are in a bubble. I've built a mathematical model that will detect a bubble in a commodity or in a stock or in an index anywhere in the world. It's the same model. All bubbles are actually essentially the same. There's a huge bubble formed in Apple back a couple of years ago, and actually formed a double peak. I wrote an article back in February suggesting the top of the market had come. The model I had was showing a very high score for a bubble, score of 100%. It actually went up slightly higher, as bubbles tend to do. This is what I presented in the article back in February. I said at that point, mid-February, that's about as far the market is going to go. 5 days later, the market peaked out. So I was very close to predicting that top. The market came down through April, May, formed several repeat tops as it's gone through, and then came down into August. And a significant drop of 32%, and has climbed up a little bit since then in November. I'm not sure that it'll actually regain the highs again. But certainly that did come down in exactly the same way as you would expect a bubble to do. All bubbles deflate. Now that drop in August hasn't fully deflated. There are rules that I've defined that suggest how far a bubble has to fall for it to fully deflate. And that drop in August stopped short of where it needs to go. So I'm expecting that price of Apple to come down and retest and go lower to fully deflate the price. Looked at Boeing last time, and I believe that Boeing topped out earlier this year, and that's a 27% drop we've had from the top. It's rallied a little bit since then. Home Depot, this particular stock I don't think has finished topping out yet, so the model I've got has got a top somewhere, probably Q4 of this year. We've seen a 25% drop in the mid part of this year, and so far the market has, the price of Home Depot has gone higher into that fourth quarter box. Rather. So potentially somewhere between now and December, I'll need to see if it goes to the next year, but somewhere between now and December we may see Home Depot top out. Looking at American Express, that topped out middle of last year. That's been falling down since, but it had formed a bubble. United Healthcare more recently formed the top, and then Visa, very much like Home Depot, Visa is in the current position of forming the top at the moment. Disney I didn't get to, so I'll put question marks, but I'll update you on Disney next month. Looking at global markets, I'll cover all the markets I normally cover, and I've added uranium. Finally, I've been working on it for a few months over the summer, but I'll cover uranium a little bit at the end. For Japan, going back to January, I had 2 windows of opportunity, 1 and 2. It looked like we'd reached a high there. The market came down, but then climbed higher, which means window 1 and 2 were not going to be the top of the market. I got from the model potential window 3 out in Q1, and a window of July and August, which then formed into window 3, with window 4 out in Q1. The price of the Japan index, Nikkei index, did go up into window 3 and has come back down again. So at the moment, window 3 potentially is the top of the market. Whether it will make it to window 4 or not, I don't know. China is one that both Darrell and I have been following closely. early part of this year, we had again 2 windows of opportunity for a top. Market climbed very high, and we noticed in the spring that this particular market was in a bubble. So around about April time, the model I had given out an output that China was in a bubble, and once it's in a bubble formation, you know it's going to crash. There was a particular very strong upward momentum pattern of 3 particular phases: a phase 1 change in direction, phase 2 acceleration, then phase 3 towards the top. That didn't look like the top at that stage. It looked like it would go a little bit further. And window 3 looked like it was July to December, so both Q3 and Q4 as a likely time for a top. We got to June, this was the June meeting, and I thought it might creep into July before a top happened, but actually it crashed just before that window 3 started. And it's come down quite a long way and bounced up. Now, as I said before with Apple, any stock or any index that forms a bubble, it has to come down and fully deflate. Every bubble I've researched, and I've researched dozens and dozens, over the last 100 years, they all come down and deflate. And there's a particular point they have to come down to. So it's about the point where the bubble starts to form. So that's the line where the bubble started to form. Before that, the market was in a reasonably happy state, but at the point where it got through that, went through that horizontal line, a bubble started to form, and then later on, early this year, it was in a full-blown bubble state. So the market, I think, has to go at least another 1,200 points down, and it won't. I don't think it'll go down to that line and bounce back up. It has to go down to that line and lower, and could go significantly lower. So that's only a minimum. It could actually go a lot lower than 1,200 points from where it is now. India. So India and the next 3 in Europe, I have some various changes to make. So I initially had Windows 1, 2 and 3, but in looking at Windows 3 over the summer, it looks like Windows 3 split into 2 different windows. So the market went higher in India, came down, and Windows 3 actually split into Windows 3 and Windows 4. So the top in India looks like it was in the first quarter of this year. I don't think it will make a top in Windows 4, but it'll probably be a lower high as we go into the beginning of next year. That's the trajectory of India. It looks like it topped out in the first quarter of this year. Now, next 3, Germany, France and England, similar situation. I had a window 1, which was March, April, May. Window 1 actually split into window 1 and 2. The algorithms I use are non-linear, and any change in price can lead to a significant shift in the windows. And I haven't been checking the windows and how they were changing. It wasn't a smooth change, it was a non-linear change. And the market in Germany has come down since then. It looks like it topped out again in Q1, early Q2 this year. France in the situation, I had a particular window of opportunity. That split into just actually grew and became a larger window across the first part of this year. And again, France has followed a similar trajectory to Germany. Topped out in the early part of this year. UK, the FTSE, similar sort of thing. We had one particular window out in the summer. Window 1 split up into an earlier window 1 and window 2. One thing I'd actually mentioned to Darryl was that the UK FTSE actually, the mathematics of the index are very similar to the Dow. And I can show that by overlaying window 3 and window 4, very similar windows. And although they don't look the same, the actual mathematics underlying how the index moves are very similar. And you can see that by looking at the windows of opportunity for the Dow in green, windows 3 and 4, and the UK FTSE in window 1 and 2 in red. And FTSE's come down quite a way, and doesn't look like it's going to come back up to its top again. 2 particular bubbles I've been following for quite a while now, Argentina and Venezuela. This is Argentina, very large bubble formation. It's formed a double top, and just recently has gone higher. So I thought the top had formed with window 1 just after the middle of last year. Market came down, bounced up, did form a new high, came back down again, bounced back up in August, came down again, but actually has rallied just in the last few weeks, very significantly, and formed a new top. Running the model again, it looks like there is a window of opportunity now between the end of this year, December through until end of Q1, for Argentina to top out. Venezuela, a huge bubble there in Venezuela. Following that all the way through this year, window 3 in Q4. But during the summer, after there was a very, very large 50% increase, I can't believe this happened, that the index doubled in just a month. from an already quite a high point. I actually got from the model a potential top in August. So I put that in as window 3 and moved the other window to window 4. And the market came up in August and then came back down. So it just topped out in window 3 as the model predicted, and then it's come down through into November. Now looking at some of the commodities, this is oil. Oil had come down, bounced for the early part of this year, and gone lower, reached a low, and rallied up from the March low. And I'd analysed that particular rally, and on the daily charts, it had failed every time it had tried to create upward momentum patterns. And although the rally looked like it was succeeding, it wasn't. From a mathematical point of view, it wasn't going up in a healthy way. So on the daily charts and also on the weekly chart, same thing. We had an upward move, but that phase 2, which should continue on upwards, it actually broke and came down. Phase 2 failed, and once that happened on the daily and the weekly charts, I was pretty sure that oil would come down to form another low in the summer. So I had window 4 there, and sure enough, the market came down. The price of oil came down and bottomed in that window 4. Has come up and actually gone down. It's starting to retest that low. Whether it actually hits or not, I don't know. The last couple of days, it's come down reasonably low. The model I have for oil show that we could stay low in oil price all the way through into next year. So I'm not sure that we've reached the bottom just yet. So I've got middle of next year, Q2 and Q3 as a potential further low point for oil. Gold and silver, very similar. I'll cover gold first, then silver. Gold looked like it formed the bottom in November and climbed back up. Formed a low in March, just above that bottom. And I had Q3 and Q4 of this year as a potential window 2. Market came up. Here we are in June. The market bounced down and hit that window 2, come back up and come back down again. So at the moment, gold has gone lower than the original November bottom that we thought was the bottom. But I think potentially there's let's go back. Potentially there's room for gold even to bottom into next year. I haven't put it on the chart here. But potentially that's not the end of it. There might be a further window into next year. Silver's very similar. So we had a bottom in November. Trades very similar to gold. And if we just move through that quickly, the model itself for silver doesn't actually give me the same sort of window for gold. So I put it in a dotted format because the model's not giving me the same numbers. So I don't want to suggest the model is doing that. But because they trade so similarly, I put a box there in a dotted format to reflect the fact that silver and gold trade so similarly. And sure enough, silver's come down and formed a low in the second half, a bottom in the second half of this year. The last few now, we look at natural gas, copper, coffee, and uranium, and then we'll wrap up. Looking at a multi-year view of natural gas, just looking at those years, we see a horizontal sort of move in the price of natural gas over a number of years, and is now retesting that low of 2012. Just focusing on the last couple of years, we saw a low in the first part of the year, what I call window 1, and potentially a window 2 actually in the beginning of next year. Formed a low in March, bounced back up. But I realised that the window at the end of the beginning of next year actually had a Q4 as part of the window of opportunity. So I extended out window 2 to cover Q4 this year and Q1 next year. And then what we've seen is the price of natural gas has come down into window 2 and has come down even lower. Copper multi-year view, just focusing on the last couple of years there. Looked like it formed a low early part of this year, bounced up, and I thought that was it, but it's come back down again. And at the moment, the model's showing me a window last 2 months of this year and first 3 months of next year, and it's actually just recently come down into that window now. Looking at coffee, again, the last 2-3 years of coffee. This was the early part of the year, April, May, June. Window I had for the Q1 of this year, I just extended in October to include December as well. And it looks like with that downward trajectory, we may see coffee come into that window 3, somewhere between beginning of December and end of Q1 next year. Uranium, very quickly wrap up with uranium. This is a multi-year view from 2005. This is a yearly chart. So each candlestick is 1 year of activity. We had a huge spike here between 2006 and 2007. This would be phase 1 of a downward move, so it's an upward move and a downward move. and phase 2 beginning. Phase 2 normally is 9 candlesticks, it's formed 6, so it's 3 more years effectively of this pattern. So that could take us through to a low 2018. Whether it'll make it or not, it's a very flat pattern, which I don't necessarily think will complete, but it certainly suggests we could see a low price of uranium through the next few years. This is a quarterly view, similar sort of thing, but each candlestick now is 3 months of activity. But phase 1 and phase 2, I'll put it in a dotted line, but it actually failed at that point in 2009. It failed again in 2010. Anyone remember what happened in there in 2011 before that spike downwards? That was the disaster in Japan. The price of uranium came down very sharply there, and it formed another pattern, so phase 1, phase 2, phase 3. So on the quarterly charts, we're seeing potentially a run into next year or the year after as a low point in price. But again, it's very flat, so I don't know how well that pattern will progress over the next couple of years. On the monthly chart, we had a phase 1, but it failed 3 or 4 times to form a phase 2. Then we had a rally in 2010, and as I said, we had the drop in 2011 with the issues in Japan. Just focusing on the monthly chart since 2010 onwards, this is a more detailed chart. We had phase 1 and a phase 2. This is now completed correctly with 9 candlesticks, each one lower than the 4 candlesticks before, and a phase 3 all the way to candlestick 13, counting according to a certain rule. So we're at the end of that phase, which again tells me that we could be in a final bottoming process for uranium. Whether it's the end of this year, beginning of next year, or it'll bounce along for another 2 years. Potentially we'll see uranium low for some time. Interesting that we've had a lower volume over this year compared with last year, down the bottom right hand corner. Looking at the weekly charts in just the last couple of years, this is what we're seeing in uranium close up just the last couple of years. It's very volatile, prices are coming down in that range, and there's a low point there that's hit several times at 4.7 on this particular chart. If you're looking to invest in uranium and it hits that line again, you might want to buy in, because it's probably going to rise higher. There might be some production costs that are forming a low there, in which case they won't go any lower, but that's the potential low point for uranium. This is what I'm trying to cover the next couple of months. Some more commodities, currencies and stocks. Thank you very much, that's the end. Hope you enjoyed that.